Have you ever wondered if crypto trading is just a gamble? With stories of overnight millionaires and people losing it all, it's easy to think it's just a digital casino. But what if most of what you've heard is wrong? Today we're busting the 7 biggest myths about crypto that keep people on the sidelines. We'll separate fact from fiction and show you the real strategies behind smart crypto investing. This isn't hype, it's education. By the end, you'll see the crypto market in a whole new light. Let's dive in. Let's tackle one of the most pervasive myths surrounding the world of cryptocurrency, that crypto trading is simply gambling. This is a common misconception, often fueled by a lack of understanding about what informed crypto trading truly entails. Sure, you gamble, throw money at random coins, chasing hype and rumors and blindly hope for the best. Many newcomers fall into this trap, treating crypto like a lottery ticket, but that's not real trading, that's speculation. And it's a far cry from the strategic approach employed by seasoned traders. Informed trading is about skill, not luck. It's about making calculated decisions based on data and analysis, not just gut feelings. It's research, rigorous analysis, and a well-defined strategy. It's about understanding the market dynamics and developing a plan to navigate them successfully. Traders meticulously study projects, delving into their fundamentals and potential. They carefully read white papers, dissecting the technology and the vision behind each project. And they thoroughly analyze the teams and the underlying technology to assess the project's viability and long-term prospects. They use fundamental analysis to assess the intrinsic value of an asset, looking at factors like market capitalization and real-world adoption. And they employ technical analysis to spot trends and patterns in price movements, using charts and indicators to predict future price action. Most importantly, they manage risk, a crucial aspect often ignored by gamblers. They are disciplined, never betting more than they can afford to lose, understanding that losses are a part of the game. They use stop losses to limit potential losses on individual trades, protecting their capital. And they diversify their portfolios across multiple assets to mitigate risk and increase their chances of success. A gambler goes all in, hoping for a quick win. A trader plans for the long term, building a sustainable strategy for consistent gains. The fundamental difference? Discipline, a commitment to learning, and a thirst for knowledge. So, is crypto trading gambling? Only if you choose to treat it that way, approaching it with recklessness and ignorance. Smart trading is about calculated moves, based on thorough research and analysis, not blind bets fueled by emotion. The house doesn't always win. In fact, with the right approach, you can significantly increase your odds of success. If you play with a well-defined strategy, a clear understanding of risk, and a commitment to continuous learning. Don't confuse luck with skill. In the long run, skill will always prevail. Myth number 2. You need to be rich, rolling in dough, to even think about trading crypto. Many believe that you need a substantial amount of capital to get started in the world of digital currencies. The truth? You can actually start with as little as $10 or $20. It doesn't require a fortune to dip your toes into the crypto waters. Most exchanges let you buy fractions of coins, which opens up the market to a much wider audience. So there's no need to buy a whole Bitcoin, which can be quite expensive. Fractional investing makes crypto accessible to everyone, regardless of their financial background. In fact, starting small is smart, a wise move for any beginner. You'll inevitably make mistakes along the way, so it's better to learn with a small amount at stake. Think of your first investment as tuition for your crypto education, a learning experience that will pay off in the long run. Focus on learning the ropes, understanding the market, and not getting rich quick. As you gain experience and confidence, you can gradually increase your investment. The real barrier to entry isn't money, it's something else entirely. It's knowledge, understanding the market dynamics, and the discipline to stick to your strategy. Start small, learn the ins and outs, and grow your investment over time. Myth 3. You need to be a tech genius to get into crypto. Not true. Today's apps are as easy to use as your banking app. You don't need to understand blockchain code, just like you don't need to know how the internet works to send an email. Platforms like Coinbase and Crypto.com are designed for beginners. Tons of free resources break down the basics for you. It's not about being a tech expert. It's about being willing to learn. If you can use a smartphone, you can use crypto. The most dangerous myth? That crypto is a get-rich-quick scheme. Viral stories of overnight millionaires are the exception, not the rule. For every big winner, thousands lose chasing hype. Crypto is volatile. Prices can soar or crash in hours. Chasing pumps is gambling, not investing. Real success comes from patience, discipline, and a long-term mindset. Focus on solid projects and steady growth, not lottery tickets. Dollar cost averaging, investing a set amount regularly, helps smooth out volatility. Don't let FOMO drive your decisions. Building wealth takes time. Myth 5. The blanket statement that all cryptocurrencies are the same. This is a common misconception that can lead to poor investment decisions, not even close to the truth. The crypto world is vast and varied. Take Bitcoin and Ethereum, for example. They have fundamentally different purposes and underlying technologies that drive them. Coins typically run on their own dedicated blockchains, acting as independent networks, while tokens are often built on top of existing blockchains like Ethereum, leveraging their infrastructure. Some cryptocurrencies aim to be stores of value like digital gold. Others are designed to power decentralized applications, or dApps, offering various functionalities. And yes, some are created purely as memes, with little to no practical use. Therefore, thorough research is absolutely critical. You need to know exactly what you're buying and, more importantly, understand the reasons behind your investment. Would you approach investing in a tech giant like Apple the same way you would a completely unknown startup? Of course not. The risk profiles are vastly different. Ask yourself, is this cryptocurrency intended as a long-term store of value? Or is it designed as a platform for other applications? Is it a genuine utility token with a clear purpose? Or is it simply riding the wave of hype? Understanding these fundamental differences is absolutely key to making smart and informed investment decisions in the crypto space. So, don't make the mistake of lumping all cryptocurrencies together as if they are one and the same. Instead, diversify your portfolio with a clear purpose and strategy in mind. Myth 6. Crypto is illegal or shady. In most developed countries, crypto trading is legal and regulated. Governments are building frameworks, not banning crypto. The IRS taxes crypto profits like stocks, clear sign of legitimacy. Early associations with crime are outdated. Today, major exchanges follow strict laws. Blockchains are public and traceable, bad for criminals. Some countries ban crypto, but most don't. Use reputable, regulated exchanges and you're on solid ground. For most people, crypto is a legitimate, legal market. Final myth. You need to watch the market non-stop. Crypto trades 24/7, but you don't have to. Modern platforms let you automate trades with stop loss and take profit orders. Set your strategy, let the system do the work. You can even automate regular buys to dollar cost average. Advanced tools and bots can handle complex strategies. The key is to work smarter, not harder. Don't let crypto take over your life. Set your rules, walk away, and let your plan play out. There you have it. 7 crypto myths, busted. Crypto isn't just gambling, you don't need to be rich or a tech expert, and it's not a get-rich-quick scheme. Not all cryptos are the same, the space is more regulated than you think, and you don't need to be glued to your screen. Which myth surprised you most? Drop a comment below. If you found this helpful, hit subscribe for more no-nonsense finance content. Thanks for watching, and I'll see you in the next video. Stay curious, stay smart.